There are 4 steps in what we call the accounting cycle. Step 1, analyzing transactions, figuring out the essence of what happened. Now, first of all, in order to do this, you got to design the business documents. And notice here that we've got here documents in quotation marks. Those are pieces of paper. They're invoices and purchase orders and other things. But often now it's a computer system to gather the kind of data you need. Confirm that the transaction took place. How much was it if we're talking about a monetary amount? Structure the data. Capture the essence of the data, the important characteristics, so that we can know what happened later on. And analyzing transactions also means thinking about the economic essence. What just happened? Did we just earn some money? Did we just incur some obligations that we're going to have to take care of later on? You better, when something happens, stop right then or have a system in place right then to determine the economic essence. Because by the time you stop and think, oh, I wonder what happened, if you don't have a system in place, another thing's going to happen and another thing's going to happen. So the first part of the accounting cycle is having a system in place that allows you to analyze transactions, determine the economic essence of what just happened. Step 2 in the accounting cycle is to record the effects of these transactions. Step 1, you analyze them, determine the economic essence. And step 2, you better record this. Get it written down. If you don't get it written down, you don't know whether it happened or not. You better design some kind of code or some kind of system, something that efficiently captures the essence of the transactions. I mean, you can't record every single thing. You'll be buried in all kinds of little bits and bytes of information here and there. You better have a code in place. Well, we got one for you. If you're talking about business and the accounting cycle, we've got one. It's called debits and credits. It's a system that's been around for over 500 years. It's a code, and it's awesome. And you are soon going to be one of the persons who understands this code. Step 3 in the accounting cycle is you need to summarize the effects of the transactions. Okay, it's great to know that Coca-Cola had 650 billion servings of their products in 2012. That's nice. But we need to know, okay, how much money do they make? How many assets do they have? What's going on? We have to summarize it. We have to distill the cumulative effect of these hundreds, thousands, millions, billions, or in the case of Google, even trillions of transactions. That's step 3 of the accounting cycle. We call it posting journal entries and preparing a trial balance, which takes all these complicated things that happen and that have happened during the month or the week or the year, whatever we're talking about, and just getting it down, summarizing it, so that we can start to say, okay, we get a sense of the general picture of what happened here. Step 4 of the accounting cycle is, okay, now prepare reports. See, it's great to gather all these data. That was fun. That was really fun. But now we have to determine, what do the decision makers need to know? And we have to then prepare the report so the decision makers can have the information in their hands to make the decisions. In an accounting sense, we're going to do some adjusting entries. Wow, you're going to love adjusting entries. And prepare the financial statements, the balance sheet, the income statement, and the statement of cash flows. And then we're going to close the books so we can be ready to do it next year all over again. 4 steps in the accounting cycle. Let's review them. Step 1, analyze transactions, meaning determine the economic essence of what just happened and make sure you've got a system in place that captures this economic essence. Step 2, record the effects of the transactions. You better have a code in place. In accounting, that code is debits and credits. Step 3, we want to summarize the transactions. Make sure we take all these hundreds, thousands, millions, or billions, or trillions of things that happen and make sure we get the essence, distill the essence. And step 4, prepare the reports. Decision makers need reports so they can see what the situation is and go forward. Those are the 4 steps in the accounting cycle.